Hey guys, what's up? Welcome to another post for Bitcoin technical analysis. What I have here is the Bitcoin versus USD. These are the one-day candles from Bitfinex. This is how I left the chart in my last video. I draw these arrows previously, and yeah, as I was saying, I expected the price to go down. I probably didn't expect to go down that fast, but it did. Anyways, I'm gonna clean up this a little bit. I'm gonna delete this line here because it's not serving us anymore. So we have a little bit less lines here, and we can see the chart a little bit more clean. I want to show first a little bit of history of bubbles. So this is the Apple stock in the years 2000s when the dot-com bubble happens. Next, I have the Nasdaq chart, also from the year 2000s, when it was the dot-com bubble. And then I have here the chart for Bitcoin back in 2013, yeah, at the end of 2013, beginning of 2014. Why do I show this? Because I want to show what they have in common. Okay, so what they all have in common is that they come from a long consolidation period, and then all of a sudden when the bubble starts, it goes up quite quick, quicker than normal, and then they have a huge drop. All right, and then from this huge drop, it goes back up quick. So everybody expect when it recovers quick that we are going back to normal and we're going to go to all-time high again, because we come from a long bull run, and during this bull run we went through many crashes before, but it always recovers and goes back to all-time high. So after this big crash, when it started to recover quick, we all tend to think that it's going to recover and go to all-time highs again, because this bull run, it's never going to end, because people is so excited, and the markets at this point are driven by emotions. They are not driven because of the fundamentals, because of the technology behind it. When we enter bubble territory, then the fundamentals no matter anymore. The technology behind the asset don't matter anymore, and the only thing that drives the price up and down is human emotions. This has been proven through history over and over. We can see the same patterns in this Nasdaq chart. It was consolidating for some time, then it started to go up, then it goes up parabolic, then a big crash here, recover quick, and everybody thinks we're going to hit all-time high again, but it doesn't happen, and then it crashes farther. Same thing happened with Bitcoin in 2013, beginning of 2014. It goes up, long consolidation, goes up, then parabolic, then big crash here, and then fast recovery. We all think it's going to go to all-time highs, $1 million per Bitcoin, but it doesn't happen, and we crash farther. Now, why do I think that Bitcoin and all the other cryptos, for this matter, in general, the crypto market cap, why do I think we're not anywhere near the bottom? Okay, I don't think we're near the bottom because if we again look through history, it should crash all the way down to where the bubble started, at least. And after that, not only that, sometimes it could recover before that, like we've seen in Bitcoin in the end of 2013. It didn't go all the way down just yet. Okay, it had a big crash and then it started to recover. But what happened, because the market didn't correct naturally until the end, because there was so many people holding and buying the dips and believing in in the asset so much. What happened is we prolonged the bear market for so long, but in the end we touched bottom. In the end we touched bottom, and it went down to where the bubble started. It has to happen naturally. Okay, the indicator to know where the bottom is going to be is that when we touch the bottom, we will go through a quite long consolidation period before we can actually start the bull market again. This happened for the Nasdaq. Okay, so we touch bottom here and then long consolidation until then we started actually the bottom here, until we started the growth. But we had first to exit the trend, the downtrend, okay? Once we exit it, we break the downtrend. Here it was broken, it started consolidating for a long time. Then we can start to think about we're near the bottom, okay? For Apple, same thing. We crashed all the way down, almost down to where it started. Maybe not yet, but yeah, here was the bottom. So, but after that, you can see when we break the downtrend, when we crash, when we actually exit the downtrend and we consolidate for quite a long time, then is when we can go and say that we are near the bottom. When we consolidate for a long time, it's not usually gonna, crash and start going down. So what happened here with Bitcoin at the moment is we have not exited any downtrend channel. We have not been through any consolidation period. So even if this starts to recover from here and we see the price going up, it is not the bottom. Naturally, it has to go all the way down where the bubble started, and this is as low as $900 per Bitcoin. It doesn't matter how long it takes. It will probably take months from here. It doesn't matter. It will eventually go down to, at the very least, 900. And if you ask me, I think we're going to go lower than that. I wouldn't be surprised if Bitcoin goes down to $600 or $400 again and consolidates around that area. This has been proven through history over and over again. If you go to Google and you search for any other bubble, the housing bubble, the dot-com bubble, the tulips bubble, any bubble, you will see it has the same patterns, and it eventually has to go down to where it started, consolidate for some time, and then you can say we're near the bottom. Now, what's happening with Bitcoin at the moment is that all these guys that are holding Bitcoin because they claim that they believe in this forever, this is going to be the future money, this is going to be the future revolution, all that. Yeah, true. I believe it's going to be the future, and I believe it's, of course, after it finishes crashing and consolidating, we're going to go all to all-time highs to look for the all-time high again and break it and go up farther. Of course, I believe that, but I don't know if we're months or years from that right now. So all these people that buy the dips, guys, the guys that are buying the dips and promoting and advising other people to buy the dips, these poor people that is holding in losses right now, and they continue to buy the dips because they think that buying the dip it will make out for their losses. Okay, these people, which is majority of people at the moment, are trading or are investing based on emotions because they didn't fear that they lost so much already, that they buy the dips hoping this is the bottom, and from here they will make up for their losses. In the end, what's going to happen is that, and I'm not just saying because I think it's going to happen, there's a high probability for this to happen based on the bubble model, how it's driven by human emotions. There's a high probability that the only ones that are going to be actually holding until the bottom are those who bought so cheap long ago that it doesn't matter how low it goes, they will not be losing money. But all these guys that bought here in the return to normal stage, which is a lot of people, all these that bought here and then they started to lose and now they're losing a lot. They keep buying the dips, following the advice from other people that doesn't really understand about how markets are driven by human emotions. It's not about the fundamentals anymore. So all these people that's buying the dips now will eventually surrender when they cannot take any more losses. They will sell at the very bottom in the despair phase. That's what it always happens. That's why we have a bubble model, which is telling you how the human emotions actually move the prices, okay? It is not a coincidence that all the bubbles follow the same pattern. It is not. If any asset will follow these patterns, why would technology have anything to do? Because the housing bubble had nothing to do with crypto technology, and it followed the same patterns. Any asset, you can see it's not about the hard fork anymore. It is not about the ICO's craziness anymore. Once we enter bubble territory, fundamentals no matter. So I will not be correlating the price movement with a Bitcoin hard fork. I will be basing my analysis 100% in history and in human emotions and how bubbles react. That's why I was able to call the top for Ethereum and the top for Bitcoin. And I'm not saying this because I'm the smartest person in the earth or super skilled, but because I followed the bubble model and because I only look at history and bubble models. If you go to my estimate account and you scroll down all the way down, 1 month ago, last month, it says here, 17/6/2017, Ethereum versus Bitcoin analysis. I think Ethereum is about to go down. Okay, this was the very top. If you look for previous posts before this one, I was super bullish on Ethereum and for Bitcoin. I was super bullish. I'm not lying. You can just go and check it out. But from this day, it's 1 month ago today. That was my first post when I started to be bearish on Ethereum. So you can see that's how the chart looked 1 month ago. We were about to start crashing. Okay, so Ethereum versus Bitcoin technical analysis number 5. If you look previous to this, I was bullish, and next to this, anything after this, I am bearish. And after this, I started to show the bubble model, which I have been showing, for the last month or more. I started making videos on YouTube recently, but before that, I was posting already on Estimate, and I did call the top for both Ethereum and Bitcoin. And not because I want to brag about it, but I think following the bubble model and following other bubbles in history, I will be able to predict the bottom as well. And if I'm wrong, I'm wrong. Look, I don't care. I will keep doing these charts every week. I will be leaving here my arrows from week to week, so you can see if I was right or if I was wrong. If I was wrong, I don't care. I'll just say it. My prediction for the next weeks, it's going to be the same. We are not anywhere near the bottom, and I want to explain why and when we are going to be near the bottom according to my analysis. We will be able to say we are near the bottom when we break this downtrend or the next downtrend, when we actually exit the downtrend and go into a long consolidation period. And this will have to be very, very close from where we started the bubble here. Until we don't get there, I won't think we are near the bottom. Okay, so when we are at the bottom, the price should, break the downtrend line and do something like this, up and down, a little bit up and down, volatile, but up and down. And after some time doing that, breaking all the downtrends, then I will start to say we're near the bottom. I don't know how long it's going to take. I think it's going to take a few months, because looking at history again, through Bitcoin bubbles in the past, they took months or years to actually be on the bottom. So the short one was from the middle of 2013 until the end of 2013. It was about 6 months between bubble and bubble. So it was 6 months, probably almost 6 months, until we touched bottom and we started the bull market again. So if I go and look through history, I think it's gonna take at least few months from here. It's been 1 month crashing already, so I don't know, but for now, what I'm going to say is this is going to continue to go down. I didn't draw an arrow here in my last video. I expected this crash to be slower than it was, but anyways, now we're here around 2,000, a little bit less than 2,000, 985. So I will just draw my arrow from here where we are right now, 979 actually, and this is going to be, I think the next stop, it's gonna be this next Fibonacci level down here. Eventually, I think we're gonna break that But of course we're going to have bounces, because what I said before, there's a lot of buy the dips people. So people is buying the dips still. They still believing they will make up for their losses. So of course we're going to be jumping up and down a little bit, but that's not going to help. Okay, so of course expect some bounces, some people buying the dips, believing this is the bottom, but it's not. In the end, this has to go down. It has to go down. Okay, I'm gonna leave it here. Guys, thank you very much for watching, and I'll see you in the next video. Bye.